Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar loosen up a little bit. It's really a play from what we talked about from the end of last week and the beginning of this week on the Asian analysis. We had this good, strong wick on the daily. And one of the things, and I guess just to focus on, we've got some stories going on as far as what may be pushing the market or not pushing the market. But we're going to move on in here into the daily, and once again, just to focus on what we had talked about, which was the disparity in these two spreads. And look how wide this is now. As wide as this was, and let's pull this back. You can see how wide this was here, and we saw quite the sell-off, return back here in the euro, how wide the spread it got. Well, look how wide we got, even wider here. When you look at this, and so that's what we're expecting, technically a pullback. And the market had eased back a bit. I figured it would ease back a bit yesterday. Actually, I thought it was even going to even pull back a little bit further when we go and take a look at the 30-minute. Figured they'd have a little bit more pressure on it. I thought that we might even dip down into maybe about 1288 or a little bit lower than that. We made it right here to the 38% on this pullback, and we've held here, and we've tried to move a little bit higher. We're kind of dipping around back and forth. When we came in, we were just around 13, 17. Then we dipped to 14, popped real quick to almost 24, and now we're kind of easing back a bit. Really what's going on with the cash dollar, really it's kind of moving around as we move back up here. If you look on the Castell Index, it itself had, back here, it itself had rebounded to the 38%. It's kind of starting to roll back over. We'll see how, with President's Day, things were a little bit quieter here. But I think let's move into the shorter list. There we go. So kind of mixed bagging it a little bit in this range here. I thought, like I said, as I mentioned, I thought we'd pull back just a little bit further, and then you'd see the market move higher. So we're kind of still a little bit middle of the road in it, even though we're above 113. As I mentioned, it came on, and it was 13.17, kind of takes a dip back. Okay, it looks like it's going to start to slide, then quickly jumps up. Okay, now we're starting to move up, and now it kind of starts to slide back. So let's start the morning off, see what the news is, and then kind of move on from there as all the players come back into 4. So starting off with the morning bid, Japan's Honda is expected to give its reasons for shutting down its only UK plant in Swindon this morning with a news conference attended by Chief Executive Takahiro Hachigo. Whether or not the car maker chooses to put the focus on the difficulties faced by the sector globally, or instead to highlight Brexit-related concerns, supply chain disruption, and tariffs among the closure will feed into the wider debate about the future of the UK economy, assuming it leaves the EU and its single market. Opposition Labour Party leader Jeremy Corbyn will meanwhile seek to put yesterday's defections of 7 lawmakers behind him and put his case for Britain to remain in customs union with the EU, something Brussels is more than happy to countenance, but which is anathema to hard Brexiters in Theresa May's Conservative Party. Germany's account surplus remained by far the world's largest last year because of its strong exports. Data from the Institute showed this morning in a readout that will add to the international criticism of Germany's economic policy. The surplus of a proportion of overall economic output stands well above the ceiling set out by the European Commission, which along with the IMF has called on Berlin to address imbalance by boosting investment and wage growth, things that would stimulate its neighbors' economies. Angela Merkel's government has consistently brushed off that criticism and argues that surplus merely reflects the attractiveness of German goods and a range of other hard-to-influence variables. It remains to be seen whether the high surplus plays into Donald Trump's decision-making as he weighs how to respond to a Commerce Department report designating auto imports as a national security threat. An Italian Senate committee will decide today whether to allow prosecutors to investigate Deputy Prime Minister Matteo Salvini for abuse of for office and kidnapping over his insistence last August that 150 migrants be held on board an Italian Coast Guard ship for 5 days. The chances the investigation will be ditched rose after 5-star party members voted in an online ballot on Monday to instruct their senators to block it. If that is the outcome. Let's go on to move on to the markets. World markets are struggling for the direction on Tuesday after a slow but buoyant start to the week. The latest round of Sino-US trade talks gets underway in Washington later amid some optimism and progress is being made. The Bank of Japan underlined its this year's dovish tilt of the world's major central banks by saying it would ease policy again if faced with destabilizing surge in the yen. Hong Kong Shanghai Bank shares were expected to be lose up to 3% at the open of its latest earnings lagged forecast and warned about economic slowdown in China and Britain. The absence of U.S. markets for President's Day on Monday sapped some impetus from the early part of the week. U.S. stock futures were flat overnight as the European equivalents. First thing, major equity bank shares or benchmarks in Shanghai and Hong Kong, Tokyo, and Seoul were little changed. Let's see, for the rest of the EU and possible resolution of the U.S.-China trade row has raised concerns that Washington will now turn its attention to trade with Europe. A confidential U.S. Commerce Department report sent to Trump over the weekend, while expected to clear the way to threaten to up tariffs up to 25% imported autos, in part by designating imports a national security threat. See how this plays out. And the euro weakens as slowdown fears grow. The euro fell on Tuesday as investors shifted their focus from progress in the U.S.-China trade talks to an economic slowdown in the eurozone. The single currency was buoyed on Monday as expectations grew for an easing of the U.S.-China trade conflict, but eurozone bond yields, most notably those of German bonds, fell amid the cloudy European economic outlook that weighed on the euro. When European central bank policymakers meet on March the 7th, they're expected to slash growth. The U.S. facing a tough week, says Societe Generale strategist Kit Jukes. Today, we get the EU Commission forecast, which will only tell us what we already know. The economy is losing momentum and inflation pressures remain non-existent. The euro is likely to drift below 113, but probably not below 112. The euro is down 1/10 at 1309, edging up 1/16%, pulling away from a low of 1234. Today, traders are betting on a weaker euro in the coming months. They expect the ECB to maintain its monetary policy. Elsewhere, the yen weakened at 1071. The Bank of Japan, Haruhiko Kuroda, told Japanese Parliament the central bank was ready to ramp up stimulus if a rising yen hurts the economy and keeps Japan from hitting the bank's 2% inflation target. Australian dollar settled as RBA cites significant risk. The Australian dollar eased back on Tuesday after the country's central bank sounded a warning about weakness in the housing market that's taken as a dovish for interest rates. They've already raised their concerns about the employment. Now here we are with the housing market. Minutes of the RBA February policy meeting showed the board showed significant uncertainties. Moreover, the policy probabilities around these scenarios were now more evenly balanced than they had been over the preceding year. Investors have decided the risk of a rate cut is now greater than a hike, and futures imply a 70% chance probability of a quarter point easing in the 1.5% cash rate by year end. Any softness in wage and jobs data due this week will only add to those risks, while RBA Governor Philip Lowe will be grilled on the outlook during parliamentary testimony on Friday. Okay, so keep that in mind. And lastly, just to close this out, the yen weakens as the BOJ flags easing risk. Euro trims earlier gains. The dollar inched up against the yen on Tuesday after Japan's central bank raised the possibility of further policy easing, while the euro's latest bounce faded as focus shifted back to the economic challenges in the bloc. Moving on to the Fed. The Fed recent shift to the dovish tilt was expected to affect the ECB monetary policy. If the Fed were to lower interest rates, it would be natural to assume the ECB would follow suit. The German 10-year will likely fall into negative if expectations for a rate cut by the ECB increases, says Makoto Noji, chief currency and foreign strategist at SMBC Nikko Securities. The German bond yield yielded 0.110% on Monday after brushing 0.077. So let's go on and move on to the bias chart. That's kind of gives us a little bit of the lay of the land. And as you can see, we talked about this, it was almost like a microcosm because they said that they're kind of not stuck in the rub, but how they weren't moving anywhere. equities. And as I mentioned, when I came on, I saw 13.17 and then a quick dip to 13.14. I was a little bit disappointed. I really wanted us to move closer into these lower 80s. I thought that would have been a great place where the market would just get just a chance, trigger some stocks, and boom, we'd pop right back up. But as I said, we jumped up to 13.24, and I was like, okay, wow, we're starting to move. And now here we are sliding right back down the pole, even lower than what we were just a little while ago. So, and you're seeing the Tyler Index, which has rebounded to the 38%, pull back and look like, okay, that's it for it. And now we're pushing up a little bit higher. Dollar Yen did make it up to 1080, I think, on our bias chart. We were mentioning here that moves to 1079. That's our resistance. Well, the market made it up to, looks like 1081. Yeah, let's see here, 1081. It's off by 2 pips. But like I said, this does strike a little bit. I'm not sure how much it's going to affect it with the BOJ. I mean, because they're looking further out, not just for this moment and saying, hey, look, if it continues to affect it, and they're basically laying the table, then we could further ease. So you got a little bit of a bounce, but then the dollar's doing a little bit better anyway. So we shall see. So let's go and move on to the euro, as I mentioned. Now the euro has its concerns. You know, when you look out over the PMIs, German data continues to weaken. Certainly, that's going to have its continued effect lower. But as I mentioned, technically speaking, we got so overdone that we were looking potentially for a move all the way up to 1360, just to balance itself out. But as I mentioned, it almost seems like it's still going along those lines of 3 steps forward, 2 steps back. So, we may just get if we hold here and the dollar eases back, we may get a quick jump up to about 1360. So that nobody gets caught with their pants down, we're going to actually use the 1360 as our resistance here. We know yesterday we had 1336, and this worked out very well. We missed a high by about 2 pips. We're going to move this to 1360 in case the dollar, maybe a little bit later on the day, takes a little bit of a dip, and we know where the market will be, or we think the market will be targeting, which would be the 1360. Looking back here, as far as support, yeah, I thought we were going to make a move down here, this 1280. We didn't pull back that far. I was really thinking that was going to be a good little move there. I'll be doggone if I didn't do it again. Okay, there we go. There we go. I thought we'd make down here into these, like right about 85, and I thought this market would just jump at that. Look at this. Here we are selling right back down again. And let me go back in here. And this is what I'm referencing. We started a little bit lower here. We run up here, then we turn around. Now we're working even lower back here. It just seems like there's no traction. You see what I'm saying? So if you look at it now, it looks like we're probably going to try and push a little bit lower. Now that's on the 5 minute, but I just wanted to get a feel to show you like how this market was kind of like a dip back down. Okay, now we pop up. Now we're going to finally get going. Now look, all they did was just turn around, and I wouldn't even say necessarily goose stops, but they pushed a little bit hard, and here they are. I'll follow through, and here we are sliding back down the tubes. Well, if we're going to go on and slide down, and we just flipped into a buy mode, and look how quickly we're giving this up here. We're going to keep this 1280 as a marker for it to go down to. I mean, basically, short term in it, even though things have turned for the year, and I think technically we should go higher because of this very idea here with the disparity here that we've come so far. My thought is that we got a lot of people short, and and some of those people did go and get stopped out as we moved on Friday to the uncle point of 1302. But I thought there was some probably would say, I'm not going to get out. I'll hang on. And to me, their uncle point was going to be around this 1360. Well, we'll see what plays out. It's easier in some ways almost for the euro to slide back a little bit. I think evenly on both sides, I think it's going to be 3 steps forward, 2 steps back. So I think if we're going to slide back in here, this whole area, this 1286-ish. Let's take a look here on the 2-hour. That 1285 is a pretty good area right there. We'll just give just a little bit more. It's actually about 12. If this is going to hold, you don't really want to see it move past 1283. And really, like I said, we could end up seeing, because I still think technically it's overdone, and I think people use dips. Some people use dips to go on a cover. Is that if we take a dip to lows and we quickly rebound and hold these lows here, and we capture just 113.035, that'll open up the door for us to challenge back up here, which that challenge back up here would be up towards this 1360. So we're going to keep the 1280 as a low, and let's go and move on to cable. I'm going to babbling on with the euro. Cable's another one that has surprised me a bit here. Same thing. We did the Asian analysis. We're going back to that. Our resistance was at 1289, which is going to be confluencing with this downtrend line. And like I said, I don't use trend lines too much. I mean, sometimes on a very short-term basis, I look to see if I can see something break, but usually I use it where I can see or remind myself of a change of momentum. And one of the things we marked about on the cable was it had been down 8 of the last 11 days, so it was bound to trigger. I think to me at this point, it's more about what the dollar index in itself will do. And obviously the dollar index is a composite of these, 6 different currencies, each one having their own weight. Obviously the euro has the most. But to me, I think it's a matter of what the dollar will go and do. And we're certainly going to get to that. I still feel like the dollar is going to try and ease back just a little bit, and that may finally push these currencies up. But I'm surprised that we didn't see more of a lift out of the cable. I mean, there's always issues as to why this is going to happen, that's going to happen. But yeah, certainly, like I said, this is a bit of a surprise here. I thought we would have got 8 out of the last 11 days. I mean, as feeble to a certain extent as the euro's rally has been, the cable is just as feeble, if not worse. So we're going to go on and stick with this resistance, at least for now, which is this 29.53. That was from yesterday, and I'm surprised. I thought we would have triggered that. So that would be your net initial line of resistance. And, well, no changes here. We're going to go with 28.68 on the downside if we do take that slide here. So I guess we're starting the week out. I mean, it's not the start of the week. It's Tuesday now, but certainly yesterday was, graveyard action at the time. Let's go on and move in now into the Aussie. On the Aussie, we had a little bit tighter range here that we were looking at. And now, as we mentioned here, now the focus is now the referencing is the weakness in housing. And so the RBA is, in a sense, emboldening, and look at the dollar index here, is boldening that dovish stance. And that's increased now. Like I said, I'd like to go and get a little bit of taste of the news. It kind of lays what the market's looking at. Is it now it's 70% chance of a rate cut that we're looking at before the end of the year. Kind of, keeps things in perspective, because now we're going to be kind of leaning on the downside action. So we start out the week thinking, okay, we're going to get some good news out of the U.S. and China. And that certainly did go on and hold the market, or give the market a nice bid, at least initially. But we've kind of lost that. And now with this talk about the focus on housing and invigorating this dovish stance, it certainly has the market open to work a little bit lower. I think now they may want to push a little bit lower in here. And we've got 70.85 actually come in right there. 70.84. Let's take a look where we stand here on the 2-hour. I think you got to look to move towards the 70.76. I think with this dovish stance and Philip Lowe's going to be in that parliamentary situation on Friday, and they're going to be grilling him. I think the easier way for the Aussie just to go and take a quick little dip, and I think that quick little dip is going to take us down here to 70.75. That's going to be our support. Resistance is now going to be the old key level, 71.42. Actually, you might even make the case here if we tilt lower right in here. So we're actually going to move it right there, 71.32 for resistance. So we're just holding our own here and still up, fairly well bid here in the dollar Swiss. But look at this dollar index right here, coming in sprightly. Well, we had our resistance here, par 53, and the high was par 50, almost par 57. Look, if the dollar wants to make one more extra little move, I think the dollar can move a little bit higher, but I still think it's going to pull back. We're just going to go with par 67 here on the dollar Swiss. And support will move a little bit higher up here at par 08. You're already back to 1306 now. Look at that. Now the dollar CAD this is still continuing to just sit. Well, I mean, obviously we didn't get a whole lot of movement with the dollar yesterday, but just trading in a very, very tight range, just relatively quiet. I mean, just look at this: up, down, up, down, up, down, up, down, down, up. You know, I mean, it's just there's just no traction here whatsoever. So this is the one market that really you're just not going to see any changes here. We're Yes, we were still hoping, thinking we could go on a push higher here with it if the dollar wants to strengthen, but with oil being so strong, it's going to keep things in check. Resistance would come in right there at 32.92. We had our support here at 32, 36. It's trading in such a tight range. If we do go on and rotate a little bit lower, it's going to be right there at 31.98. And give me just a brief moment. Sorry about that. I had to go and get the dog in. Hang on a second. Making a lot of noise outside. So let's go and move into the dollar mex, peso. This is interesting. We're holding here. We didn't quite dip. I mean, we dipped a little bit lower, but it's not as if we got down here to go on and challenge this 1985. Trying to get an idea where this market would like to go to. There's a little bit of upside momentum here, just a little bit. And certainly with the dollar strengthening a bit, certainly helps. And we have a little bit of resistance here right there. You see this? And it's just above this 38%. See this bar right here? That would be 1930 or 1931. We'll go with that for resistance, 1931. Support, I think that's fairly clear right here, right there. 1924. Boy, this crude oil has continued to hold here. Now, what we had yesterday for our resistance was 56.05. That, in a sense, I mean, it's, we got up here to, what was it, 31? It's pushed a little bit. We're still holding up here. Now, if we look in here on the daily with the crude, Mitch, if the door's open, here's our 56.05 that we're referencing. The door's open. I mean, the target is going to be 57.18. Man, this crude is really holding up well when you think of all the, globally economy slowing down and we're just holding up in here. It's actually quite a surprise here. Let's see. We're going to go in and keep this resistance here, a 56.05. Support, though, if we get this pullback, 55.03. 55.03. Well, we had 1079 for our resistance on the dollar yen. Obviously, we got some, news of Bank of Japan or Haruhiko Kuroda indicating that they would ease if they see currency moves that are impacting, but that's not going to be at this price. I mean, if we were down here, okay, or maybe we're down here at 108, and I could see some of that talk. We're actually moving higher. The yen's moving lower. So him to say that, I don't think that it moves that much on the needle at this point. Now, it may put a lid, not a lid, a cap at how much further we can move. Maybe if we eventually move, we'd move into the upper sevens, but up here is pretty hard to go on and point to that offered too much traction. But it does offer a little bit of a bid. And so when we look on here where we've had some problems, it's going to be right here, 1088. So we're going to go with 1088 just to give it a little bit of an extra move here. 1088. And support's going to be that daily support that we held, the 1034. Well, we're clipping along here now on the analysis because, as I said, with yesterday being so quiet, there was no movement, and we'd already done the analysis from the weekend, into the Asian analysis to start the week. So we're just not seeing, there isn't a whole lot at this point, and the euro slid back to 1306, and it's just sitting there for right now. We did get some UK data that came out. Wages, let's see here. On the rise, rare bright spot for the economy. And let's take a look here. Par was also 3.4 here on the average earnings. We do have a Eurozone construction output at the top of the hour and the zoo expectations at the top of the hour. And nothing here in the States. I do have API, all stocks after the close, but nothing here in the States to focus on. So we do have zoo at the top of the hour. On German investment morale, Eurozone survey zoo, and industrial output. We gave it some room here in the Aussie end, but things have started to quiet back a bit. SPOOs are still holding up relatively well. They're just off a little bit, but holding up very, very well. So we had all the way up here to 79.62, but certainly that did not get tripped out, and we're looking here for a pullback to 78.36. Well, we're stuck in the middle of the road here. And as well as the SPOOs are done, the Aussie end's kind of kept itself in check. Resistance is now going to be 79.40, and that might even be a stretch if you think about it. Support. Just looking at how this move lined itself up, and boy, did we, look at this. I mean, the market looked I'm looking on this 2-hour chart. We get this pullback, and you're thinking really a good move is going to come in right towards here, which the market kind of paused, but it kept pushing itself even higher, and now we just gently give it back. So it's just kind of like middle of the road here in this currency. It's going to be 78.25 for support. And moving on to the Castell Index, we're looking for resistance at 97.02. And that's going to remain the same here at 97.02. So like I said, we're kind of clipping along through this analysis because there hasn't been any big changes at all since yesterday. And we had already done all the analysis at the beginning of the week from the Asian over the weekend. So it's going to remain 97.02. And support will be right there at 96.52. But certainly a move back here, this is almost going to work as a pivot. There's a little bit more resistance here at this 97.05 here. But I think initially this 02 to 05, keep an eye on here. Right here, if the market wants to hang on. We can see the market come up to 97.02 as the euro dips down, and then we get here and we just sit there. Because look at all the volume that's going on right there. Matter of fact, we'll actually move this up a little bit higher, right there. It's going to be 97.06. And really, you can push through this, and the real support won't come in until 96.52, as we mentioned. Y'all, look at gold continues to move higher here. Despite the dollar trying to move higher, look at that, gold continues to break hard, and I think we're going to get to that 1358. We will keep 1334. Really it's coming up now to 1340, but we'll keep the 1334 on the XAU as our resistance. Support comes in at 1314. I don't see any changes there at this point. We'll keep it at the 1314. And let's move into the bunds. Well, resistance, at least for now on a very short-term basis, is right there, 66.55. And it's only 3 pips away if we're going to push even higher. And obviously, we've got some Eurozone data that's coming up that could even affect that more so. So one moment. This is a very key area right here, the 66.52. It's just a nudge higher. $66.78 if it makes that run up there. If it does, that's what we'll be looking at, and we'll actually give it in case we get the some tough news coming out. It's going to be right there, 66.78. If it wants to push even higher. I mean, just as a target that they'd be shooting for, I definitely think we'd take a bit of a respite at that point. But certainly these are the concerns with the euro, is that, as we talked about, the higher the bond goes, you have less of a push here for the euro, even though technically it's very oversold. Support comes in right there, 66.29. Did look at that. We made this, came back up here and tagged that here. Didn't think we were going to see this. It came up to 11.360. And we're going to keep this, or not keep this, but that'll be our resistance right there, 11.360. With support, keep it simple, it's going to be 11.235. Euro continues to weaken here. And we do have data, as I mentioned, at the top of the hour, and the dollar index here just continue to push up higher. But I'm looking at this 97.06. It's actually between 97.02 and 06. But I think we can go on and push here. I still think the dollar may ease back. The problem is, like I said, the things are so tough in Europe. It really works, as I said, like a ball and chain. But we're oversold here. The disparity between the EMAs, I think basically is just going to trade in between those levels. I think if we were to stretch up to 1306, 1360, that'd be, you'd quickly find some sellers here at that point. But look here, this dollar index is still holding up well. And when we look here with the cable, I would have thought we'd have been higher. But look at the stalwart in gold. Gold continues to hold up so well here. And I really don't expect very much pushback. At least a little bit of a pause once you get up to about 1334. But eventually I think we'll make it up here to 1358 here. Crude oil just above that, right there's our resistance area again, that 56.05. We'll see how that plays out. And that's going to do it for us here on the European Crossover webinar. I'll go and get this posted in the chat room. And thanks for joining us here as we go on and get the week started. Week started yesterday, but with U.S. close, we had relatively quiet time, and we have some European data coming up at the top of the hour.